Hey y'all, good morning. I just wanted to go through two downside trades that I took and talk to you about trading in an uptrending market. So, really, there's just like two things that I look for, right? First of all, most of the time I'm skipping downside trades. I've got Amazon here. I actually did not take this trade, but I want to bring it up because it's a great example of a put that would have worked and worked well. So it declined over several days. So, um, what I'm looking for when we're in a rising market, I'm looking for, in order to consider a downside trade, I'm looking for a double top or some kind of place on the daily where we have resistance and then resistance again. So there is a specific level here, right? And there are types of there are two reasons I will trade in a rising market. One is if I see a double top here, or it doesn't have to be exact. It can also be like the inverse Wyckoff spring, where it pulls up a little bit more than the other side. Could also test an area 3 times. So I'm looking for a setup like this on the daily. Remember, y'all, that the daily is my if I'm not seeing anything on the daily, I'm not going down to the hourly time frame. So I'll show you with my example. So here's one that I traded on Apple, and this one it hit my target pretty quickly. Usually on downside trades, I will trade with a target. No, I'm not typically waiting for a different kind of exit. I just choose a target. This one was based on the 20 EMA. I saw that it has potential to come down to 282, but if it does that, it's not going to be in a straight line. Um, Usually it's not. Amazon worked really well. But what I saw here already was an area of test, a show of sellers, then a retest, and then this area that just kept getting sold. So yesterday I got in early while I was chatting with everyone. We got in early and held through this area because my invalidation is a close above the invalidation line. But as you can see, also there is, there's wicks all over that place. So it really held tight to it. Had this little spike here, which was very short term, and then just reversed. Stuff like this does happen. That's why, I'm not looking at the 5 and 15 to get out of something. My invalidation is going to be based for the downside or upside. When my trade is new, my invalidation is placed above like the area that I expect it to move away from. But when we're talking about exiting after we're well in the money, for my downside trades in a trending market, I'm out once my target is hit. And then for trending, when I'm going to the upside, I'll use things like previous day low to get out, or a mix of profit targets and previous day lows. Like usually with breakouts, I'll do a profit target, just because there is a certain point, like here on now, there's a certain point where I knew once it would get near this area, there's potential for a reversal. So I just took that trade to the upside. So going back to here, so this one, I don't really particularly like trading downside puts in a trending market because they're quick. Also, it takes attention away from the upside because I positioned well to get 100% gain on this one. but it moved down 4%. If we had continued going down, because I saw a mix of stocks hitting their levels, and it was a mix yesterday, right? So we had some things really holding, um, some things that, were just kind of stagnant. Um, so yeah, for so that's what I'd look at there. And then here, this one I took a 30% loss. Um, so I did about 2,800 on the Apple trade, and then on this one I lost about $500. And I was just early. If you see this was to me a resistance area. This is a second resistance area. And it's perfectly fine. It could have turned from here, but it didn't. It kept going up, so I had to close it. So would I trade this to the downside again? Maybe. But there are other things coming up that potentially, I thought Dell, I don't know, I still think Dell might give away some gains. But if not, I need to pay attention to getting in on the upside, right? So there are things that I'm looking at now, like eventually coin will break out. So I'm looking for an upside there. There are a lot of these from last week where they shot up and then pulled back. So Hood, now potentially CRM. This has really gone all the way back down to its base, but I'm still for it. And then movers that are potentially pressing back up. So now what we want to see is that the levels. So y'all saw how I did. Amazon just was such a clear example of what would be acceptable to trade downside in a rising market. But what you see here is once it got near the previous high, then it started to break down. So that's all we want to check for. We want to see if this is in some ways creating a second top, or if we're just going to power through. But a trade from here back up here, I mean, look at that, almost 20%. You could totally trade it, even if we did roll over from there. But maybe we won't. Maybe the trend continues, which is not unusual, right? Because usually, that's the other thing I wanted to point out to you. So we're talking about, there are two types of downside trades I trade in a trending market. So one is like the digestion in the market that I just showed you. So just profit taking and a little bit of, rebalancing portfolios and things. But then the second one is a trend change, but the trend change comes after your stage 3. And I'm going to use the S&P for that. So the trend change is, one, you see the break of the S&P. It doesn't have to be S&P, but you see the break of your asset of that 50 SMA. And then we see that every time we come up, we're selling off, come up, selling off. And then it gets to a point where it gets heavier and you're topping, and there's a level it doesn't break. Once we get to that level it doesn't break, then we're also on the right side of the base. Typically, a topping phase will take several months. And then we get to this area where a downside trade is, it has more room to go there. So those are the only two times I really consider trading to the downside. Otherwise, I'm really looking to position myself for the upside. But I just wanted to share that really quickly to give you my thought process through it. Okay, thanks, y'all.